This is Ken Jacobson, NMLS number 215044. This is your mortgage update recap, really, for the week of July 25th through the 29th. On Tuesday, Walmart reported their earnings and forward guidance, and it was a miss. Both came in lower. I mention Walmart because they are the largest retailer and employer in the country. There's an old saying, as Walmart goes, so goes the economy. Well, it came in lower instead of higher. Walmart attributed it to inflation. Right now, the CPI, Consumer Price Index, is at 9.3%. That's the highest in 41 years. Walmart went on to say that because of inflation, people are spending all their money on gasoline and food and have nothing left for discretionary spending. I agree with them. I've felt the pinch, and I'm sure you have too. We also got the Case-Shiller Home Price Index. Now, Case-Shiller is considered the gold standard for evaluating home price appreciation, and it came in at up 1.5% for the month and 19.7% for the year. Blistering hot, but down a little bit from the prior month. We got the FHFA, that's a Federal Housing Finance Agency. Their home price appreciation, similar to Case-Shiller, but it only evaluates increase in prices on properties with conforming loan amounts. For us, that's a loan amount of $647,200 or below. Not a purchase price, a loan amount. For our area is Texas, Oklahoma, Arkansas, and Louisiana. We were up 1.7% for the month and 19.5% year over year. Still blistering hot, but down a little bit from last month. Prices cannot continue to go up at 19 or 20% per annum. It's great. If you bought a house last year, you made 20% on it. But they can't keep going up at that, or no one will be able to afford to buy a house. We think homes will continue to increase in price, but much slower, 1 to 5% for this year, but do not go down in price. Now, new home sales came out, and they were a miss. They were down 8% for last month, but there were fewer homes available last month. It was also the apex, the highest interest rates we've seen this year. There were 457,000 new homes listed for sale. But wait a minute. Of that 457,000, only 41,000, roughly about 9%, were actually finished and you could close on them. Now, the mainstream media jumped all over this. They said, okay, 457,000 new homes available for sale, and we've got this much average absorption of new homes on the market every month. That means we have a 9.3 month supply of new homes available, and a lot of them haven't sold, so we got a glut on the market. Wait a minute, let's inject some reality here. What you actually had is 41,000 homes available to close and move into, divided by the monthly absorption rate. You had a 28-day supply of homes available. Hardly a glut on the market. On Wednesday, the Federal Reserve raised the Fed funds rate. Now, the Fed funds rate is not your mortgage rate. The Fed funds rate is what banks charge each other to borrow money overnight, literally 24 hours. The Federal Reserve uses that rate, raises it and lowers it to try and stimulate the economy or slow down the economy. And they're actually very terrible at it. Terrible record. However, the reason your mortgage rates are as high as they are is because of inflation. The Fed has been raising the Fed funds rate to try and drive down inflation. And on Wednesday, when they raised it, the mortgage-backed securities market loved that. Mortgage-backed securities market closed up on Wednesday, closed up again on Thursday, and it's up again today. Now remember, you want mortgage-backed securities to be up. That's up in price, but down in your rate. On Thursday, we got GDP, gross domestic product. Gross domestic product tells you how the economy's doing, good or bad. Well, the preliminary read, there's three reads you get. You get a preliminary, you get a mid, and you get a final. The preliminary read on the second quarter GDP was minus 0.9%. You don't want it minus, you want it plus. The final read on the first quarter, January, February, March, was minus 1.6%. Now we'll get two more reads, like I said, on the second quarter, and that could go up or down. But right now, we got a minus 1.6 for the first quarter and a minus 0.9% for the second quarter. There has never been two consecutive negative quarters of GDP that we did not have a recession. Now the White House is trying to put a positive spin on this and redefine how you define a recession. But folks, reality is reality. On Friday, today, we got PCE, personal consumption expenditure. That is the Fed's favorite measure of inflation. It always comes in lower than CPI, Consumer Price Index, and we think the Fed uses it because it is lower than CPI and they don't look as bad. Well, it came in, the headline number came in 6.8%. That's a jump from 6.2% last month and higher than expectations of 6.7%. The core rate, now the core rate kicks out food and energy because of their volatility, don't we know that? Anyway, that came in at 4.8%, up from 4.7% last month. Inflation is here, and it's doing damage to our economy. Right now, the jumbo 30-year fixed rate mortgage is in the fours. Conforming is not there yet, but it's trying to go down and get there. If you're closing a mortgage in the next 30 to 45 days, I suggest you lock your rate. If you're unhappy with where you are or you have not applied yet, you need to call me or call Aaron. That's what we do. Thank you for listening. Have a great day and a great weekend. And God bless you. Oh, and people be safe out there.